here I am on Excel, and usually what you do to create a system is that you can use one column where you essentially explain what type of transaction has happened, and you can, for example, call this transaction text. And then the first account that you have, it can be, for example, your bank account. So in addition to bank account, we can also have a savings account. We can also have a student loan account and an equity account. So this is just an example that I'm going to show you. If you have more than one bank account, you can write a bank account for this bank, another bank, and so forth. If you have, for example, an apartment, you can add your apartment here, the price that you bought it for, a car as well. Each asset you can add here that you, for example, bought or sold. But you don't need to go as detailed into assets like your phone or your clothes or the inventory items that you have at home like chairs, fridge, etc. That's not so important. Focus on assets that you usually use a lot. So bank account, apartments, house, land, etc. So for this example, we can create an initial balance first. And after we have gotten each account, you essentially want to have two columns for each account for the debits and the credits. So you can just sum them up later on. So become debit here, credit here, debit here, credit here. Now we can write the initial balance where the student loan, since it's a liability, it's a credit account, so the total sum is in credit. So let's say that the student has a student loan of, let's say, $30,000, and we can click here so we get the accounting format. And let's say that he has $500 in his bank account, and he has $1,000 in his savings account. Now we can also update the format so it's like this. And now to calculate the equity, we can use the equal sign here in Excel, so create a formula, and we can select first the assets that we sum. So we sum the assets here, select this and sum, and then we subtract the liabilities. In this example, the only liability that we have is student loan. So we essentially get a negative equity, the parentheses mean negative, of $28,500. Now what we can do so this looks nicer is that we can select each of these, and we can select all borders here so it looks more organized. We can also select each of these and make them bold by clicking in this button or Control B. We can do the same on the debit and credit. And for the credits, to distinguish them from the debits, we can change the color to, for example, gray, like this. And we can, for example, change the color of these squares to blue. So it's essentially easier to look at and quickly get the information. The next thing that we do is we create a row for the sum of each account, the debits and credits. So we can do, for example, sum here, and we can click on the equals here and write sum for the left parenthesis, and then we can select this entire row and we can click enter. So this is the sum. Now we can also go here and sum, do the same thing, but to make it faster, Excel allows us to just go into this corner, drag it here, and do the same thing for these ones here. So now the next thing that we do is start putting in some transactions that has happened. So a transaction that could have happened is that this person has just finished university, graduated, and has now started working as a engineer, let's say. So he receives his salary for May. So he receives his salary for May. We can write the date that he received the salary. So for example, 2024 in the month of May, and in the 5th of May. And then we can write this dash, for example, and say May salary. So let's say that this engineer received $3,000 as his salary for May. That means that we debit the bank account $3,000, and let's just select all of this so they are in the accounting format like this. Perfect. So after debiting a bank account, we also have to credit another account in order to keep the accounting equation true. So what we do is we add an account for income. Now to do this, since an income account is a credit account, we can just copy this account here. Then we can click on here and we can paste it. Then we can just remove this value. And we can change this to salary income account. Now after receiving the salary, we also, in addition to debiting the bank account $3,000, we also credit the salary income $3,000. So now another transaction that this person did on the 10th of May is that he bought groceries. So we see that it kind of crashes here. To fix this, we can just click on the A column here at the side when you get this icon. And when you see the icon, you can essentially just click and hold, and then drag it like this. And he spent, let's say, $100 on groceries. So that means that the asset account of his bank decreased, so it's a credit. So here we credit $100. And we also have to debit an account, and in this case we debit an expense account for the groceries because we want to track the groceries. So to do that, we can just copy this debit account that we have here as well. Copy this, and we can paste it here. We can change this to grocery expenses account. And then we can reset these ones. So since we credited $100 to the bank account, we debit the grocery expenses account by $100 as well. So now I have added some more transactions. For example, dinner with friends, then we credit bank account and debit eating out expenses account. And then he has decided to take a vacation in Greece, in Athens, so he has bought a plane ticket and rented the hotel for 2 months. So we credit from the bank account and we debit on the expenses account. So you obviously get more than this, but this is just to show an example. After you have debited each of those correctly, you essentially create another column here called balance. And in the balance, you essentially, let me just move the color here, so it's the same color, like this. And we can, for the sum, color this as this color, orange, for example. So in the balance, you essentially subtract the debit from the credit or credit from the debit, depending on the type of account. Now, the bank account is an assets account, so it's a debit account. So you take the debit and you subtract the credit. So put the equal sign, select the debit, subtract the credit. So you get the balance after the transaction. And here likewise, you do the same. Savings account is an assets account. Now the student loan account is a credit account. So you take the credit and you subtract debit from it, like this. Now let's say that he also wants to pay back the student loan a little fast. So on the 17th he decides pay back student loan. So he decides to pay, for example, $1,000 to the student loan, and here I already did it incorrectly, but it's credit the bank account $1,000, and to decrease credit account like liabilities or equity, you essentially debit it. So here we debit $1,000. So continuing here, the credit as well, equity account as well, same thing. Now the groceries expenses account, you take the debit minus the credit. So here are all the transactions that you have done. Now the next thing that we do is to get a better overview of each account with the balances and for calculating the result of the month and then updating the equity account. So here you can write the name, account name, and we essentially want each of these accounts here. So we select bank account here, savings account. You just do this for each of those. Now we can move each of these a little lower, so we can make space here for debit and credit depending on the account that it is. And here we can write temporary balance. On the next one here we can write final adjustments, also debit and credit here. Then here we can write income statement, debit, credit, and here we can write balance sheet, debit and credit. So now we can add each of those to the debits and credits of each account. So for the bank account, it's a debit, savings account is a debit as well, student loan account is a credit, so this time we select credit, equity account is also credit, so we select credit, salary income account is a credit too, grocery expenses is a debit, eating out expenses is also a debit, and vacation expenses is also a debit. Now after we have connected each account and the results, debit or credit, we can essentially just make this table a little nicer like we did previously. And now what you want to do is write another sum column here, and you want to sum each debit of each column here. So do this, and then we sum also the credits. Then we can select and have everything in accounting format like this. And if you have done everything correctly, you should have the same total debits and the same total credit. So this is a guideline that you can use to check that you have booked your transactions correctly, because if for some reason you have booked your transactions wrong, these ones would not be the same. So for example, if you, like I was doing earlier, if you credited the student loan and instead of debiting the student loan account, you credited by accident, you wouldn't know if you didn't have the sum, but since you have the sum, we can see that these are not correctly, so what did we do wrong? Then you can go back to each transaction, check debit here, credit here, okay, credit here, debit here, okay, credit here, debit here, credits here, debits here, and then credit here, credit. Oh, here's where I go wrong. This one was supposed to be a debit. And then you check it again, and now it's correctly. So after you have done the entire month and you want to calculate the result, profit or loss, to update the equity and balance sheet, you essentially take every income and expenses and you add them here to the income statement. And if it's an income, it's a credit, so you just do equals here and select this, while if it's an expense, it's a debit, so you do the same here. And then you can select these two last ones, and you can go here and select the tick bottom corner, and then you can essentially do the sum of each column. And now after you have summed each of those, you go to this square here underneath the total of the debits or expenses, and then you click and select the credit, which is the incomes minus the expenses, and here you get the result. So in this instance it's positive, so we have achieved profit. And now to add this to the update the equity, we just do add a result account here, and then we can add this 940 as a debit like this, and also to the equity we add the result as well, so it's a credit. Because we are increasing equity, it's a credit, while if we were decreasing it, it would be technically a debit, but here you can essentially have negative numbers and it will update the equity, so you can just plus them. So you don't need to use debit here, just select the credit each time, so it will update automatically. So now the final step to update the balance sheet, you just select the debit or credit depending on the type of account that it is, asset, equity or liabilities, and you select the latest, most recent value after all the calculations. So for the bank account it would just be this one. If any final adjustments you would add them. Same here in the savings account. Now the student loan is become this one, and the equity you select this one first and you add the adjustment, so you get the new equity. And now the income and expenses account, you don't add them, you only add assets, liabilities and equity accounts. And likewise you can drag the sum here, so you select that everything is going okay. So here we see these ones are correctly and these ones are correctly as well. And the sum of this one here, you can actually just take these last two ones, which should be the same as this one here, and this one should be this one. Yeah, so now it's correctly how it should be. And I like having an Excel spreadsheet for each month. So for example, this would be May, and after I finish it, I take each of these values and the accounts, only the balance sheet accounts, that is the asset accounts, and the equity and liabilities accounts, and I essentially create everything anew on a new Excel spreadsheet for the next month. So in this case it would be June the next month, so I would just copy this document, change the text, reset each of these, add the new balance sheet values to the initial balance values for each account in order to repeat this process. So this is the accounting system that I have learned in my Bachelor's of Business Administration that I'm using for my personal expenses to manage my money, and it has worked pretty well. It has made me understand that I have a negative equity because of the student loan, which I'm trying to pay down, and also seeing where my expenses are going and essentially how I can allocate my money, earn more money in order to achieve the goals that I want, to essentially live comfortably and be able to achieve what I want and be able to buy the things that I want. So that's how you manage your money using accounting, and how you can use Excel to do it.